I'm here today with Rhona Driggs, CEO, and Tim Anderson, CFO at Empresaria. Rhona, what are the highlights of the period?
The group did see a growth in net fee income, which is very positive, despite the challenging macro environment that we were in with factors such as Brexit and the German automotive weakening. In addition, the other highlight of 2019 really has been the implementation of our Stronger Together initiative. This was an initiative that we launched back in May to really start to leverage and harness the full power of being a global group. With that, it hasn't been easy because we've, of course, had specific areas that have impacted profit levels, but we are taking difficult decisions for the good of the group going forward and have taken action much more swiftly, I think, than we have in the past. And we've had strong growth in other markets, such as our offshore recruitment sector. Looking forward, the changes we have made in 2019 have enabled us to build a stronger platform for 2020.
Tim, could you give us a top-level overview of the results reported for full year 2019?
Of course. Our diversified business has delivered growth in net fee income of 3% and growth across all but one of our sectors. Our offshore recruitment services sector has grown particularly strongly with 37% growth in net fee income. The reduction in profits, however, reflects a challenging economic environment, and as we previously communicated, we saw a significant impact from the decline in our UK engineering business and Brexit uncertainty in the UK. In Germany, the weakening of the automotive sector impacted our temp operations there. However, we did see strong growth in other markets, including offshore recruitment services, where adjusted operating profit was up 88%. Our pre-tax cash flows continued to be strong, increasing to 10.4 million, reflecting working capital inflows. Adjusted net debt has increased to 19.1 million, reflecting our 3.5 million investment in additional shares in our successful UK and US IT operation. Debt remains inexpensive, but we are focused on driving organic growth, and any investment will be targeted at existing operations.
Rhona, talk to us a little bit more about the Stronger Together initiative and what this brings to the group.
So previously, the group operated as very much independent businesses around the world and really had not taken advantage of the fact that we are a global group and we do have things that we can share, best practices across the group, across the businesses, and certainly across the globe. What we did is we looked at the brands and where they fit and actually moved to a sector structure where we have now 6 sectors that incorporate all of our brands. And that is allowing for us to create an environment of much more collaboration, cross-selling, leveraging synergies within the brands, leveraging resources within the brands and within the sectors. So we are evolving our operating models in certain brands to enable them to scale more effectively, particularly to achieve the higher temp to perm ratios that we're driving as a group. The other big part of the Stronger Together initiative is really the investment in common technology. You know, we have signed an agreement with Bullhorn. We are trying to get the group on a common platform across the globe so that it will ensure that we remain competitive and allow us to have much greater group communication as it relates to things like cross-selling and candidate sharing, et cetera, in markets that we're in currently today. And last but not least, I think the most important thing wrapping all of this up in our initiative is really creating a much stronger performance-based culture where we are creating common performance measures and are publishing those across the group and creating that sales culture that we need to really focus on that organic growth as a group, along with the cross-selling opportunities that we're now driving as a group.
So aside from building on initiatives implemented, what's the focus going forward?
We have a strategy of 4 pillars to build scale in key markets and sectors, materially increase and diversify profits. We're investing in technology to drive revenue and productivity, and we're continuing to focus on reducing our net debt, balancing any new investment against any financial constraints. We are truly focused on organic growth. The potential growth across the group is strong, and we're now able to start seeing at a brand level the benefits of being part of the larger group. This is enabling greater cross-selling, greater collaboration, and greater synergy, along with sharing best practices that are critical in an industry that is dynamic as ours. We're also really excited about driving our offshore recruitment services sector, which is unique amongst our peers in the industry, and using that as a lever to continue to drive cost efficiencies and leverage recruitment expertise across all of our businesses.
So, how should investors feel about the future?
It's an interesting question for an interesting time. All of us are feeling the impact of the coronavirus outbreak. Notwithstanding that, we are seeing very positive signs and evidence of the initiatives that we put in place in 2019 taking effect, with a positive start to 2020, particularly January and February. With our diversified business model and our strong financial position, we do feel well placed for the opportunities that lie ahead over the longer term.